The petrodollar is collapsing right now while you're watching this video, and almost nobody has explained to you what that actually means for your money. I'm not talking about some slow, boring shift that happens over 20 years and shows up in a textbook someday. I'm talking about something already in motion, already showing up in the data, already quietly deciding who gets rich over the next decade and who gets left behind. For 50 years, the entire global economy has run on one simple deal. The world buys oil in dollars, and in exchange, America gets to print money, run up debt, and live a lifestyle no other country on the planet could get away with. That deal is breaking. Countries that used to have no real choice but to use dollars are walking away from the table, one deal at a time. Central banks are buying gold at a pace we haven't seen in generations, and there's one specific type of asset that has historically exploded higher every single time something like this has happened before in history. Today I'm going to walk you through exactly what's cracking, why it's happening right now and not some far-off future date, and which asset sits directly in the blast radius in a way that could make patient, informed people a lot of money. Stay with me to the end, because you're about to understand something that most professional money managers either don't see clearly or won't say out loud on camera. Before I go any further, I want to be straight with you. What I'm about to walk you through took me years of getting things wrong and to actually understand properly. I've lost money betting against trends I didn't fully get, and I've made real money by being early on things everyone else was laughing at. This isn't theory for me. It's scar tissue. So if you're finding this useful even 10 minutes in, do yourself a favor and hit subscribe right now before you forget and scroll away. I'm going to keep breaking down exactly this kind of material in plain English. The sort of thing that usually costs you a seat at a $5,000 finance conference, and I'm handing it to you for free. That's the whole deal. You subscribe, I keep showing up with the version of this stuff nobody waters down for you. So let's start with the mechanics, because most people who toss around the phrase petrodollar have never actually had it explained to them properly, and that drives me up the wall. Here's the simple version. Back in 1971, the United States broke the link between the dollar and gold. Before that, if a country held dollars, it could, in theory, walk up and trade them for a fixed amount of gold. That system fell apart because America was printing more dollars than it had gold sitting in reserve to back them up. So President Nixon just shut the whole arrangement down almost overnight. That left the entire world with an uncomfortable question. If the dollar isn't backed by gold anymore, what exactly is it backed by? And why should anybody keep trusting it? The answer that got hammered out over the following few years, mostly through deals struck with Saudi Arabia and the rest of OPEC, was oil. And the United States essentially said, keep selling your oil in dollars, only in dollars, and in exchange we will protect your regime militarily and keep buying your oil. That single agreement is the real foundation the modern dollar has been resting on for half a century. Every country on the planet that wants to buy oil has had to first go acquire dollars to do it. That created permanent, built-in global demand for dollars all day, every day, no matter what America's own economy happened to be doing at the time. That's the real reason the U.S. could run massive deficits for decades and never truly pay a serious price for it. Everybody else needed dollars too badly to stop using them. That's not a reflection of some unbeatable American economic strength. That is a structural arrangement, a deal, and deals can end, and that deal is ending, piece by piece, right in front of us, in ways you can actually go verify yourself. Saudi Arabia, the country that basically kick-started this entire arrangement 50 years ago, has quietly started accepting other currencies for its oil sales, including the Chinese yuan, for the first time since the arrangement began. China has spent years building an entire alternative payment infrastructure, specifically designed so it doesn't have to route its trade through the dollar system and through American banks that can freeze it out with a single decision. Russia got cut off from large parts of the dollar system after the invasion of Ukraine, And instead of collapsing the way plenty of Western analysts confidently predicted, it simply built new trading relationships in other currencies and kept selling its energy anyway. India has been settling a growing share of its oil trade with Russia in currencies that aren't dollars at all. None of this by itself ends the dollar overnight. And I want to be completely clear about that, because I have no interest in being some doomsday character screaming that the dollar is going to zero by next Tuesday. That is not what is happening. What is actually happening is slower and honestly a lot scarier, precisely because it's harder to see coming. It's death by 1,000 small decisions. Every country that finds one more way to trade without touching a dollar chips a small piece off the foundation the entire system was built on. And once enough of those small pieces come off, the whole structure doesn't collapse gracefully or give you a polite warning. It tends to happen fast, the way these things always seem to, because trust is the one thing in finance that leaves the room far quicker than it ever walked in. Think about what this actually looks like from the other side, from the point of view of a country that isn't America. For 50 years, if you were the finance minister of some country and you wanted to buy oil, keep your currency stable, or borrow money on decent terms, you basically had to stay on good terms with Washington and hold your reserves in dollars, whether you liked that arrangement politically or not. There was no real alternative big enough or trusted enough to switch to. That's the part that's actually new here. It's not that any of these countries suddenly love each other or have some grand unified plan. It's that for the first time in decades, credible alternatives exist. China's economy is large enough now to be a real trading partner in its own currency. Gold markets are liquid enough that a central bank can quietly build a massive position without causing chaos. New payment systems exist that don't have to touch a single American bank at any point in the chain. Once an alternative exists, even an imperfect one, countries that felt trapped for 50 years start testing the exits, a little at a time, to see what happens, and once enough of them test it without getting punished, the rest stop being scared to follow. Now here's the part that connects this directly to your actual wallet, and it's the piece almost nobody bothers to explain properly. Central banks around the world have been buying gold in genuinely enormous quantities over the past few years, at a pace that is, by any historical measure, extraordinary. We're not talking about a little more than usual. We're talking multiples of what these same institutions were buying a decade ago. And these aren't small, unstable, desperate countries doing this out of panic. This is China. This is Poland. This is Turkey. This is India. This is a long list of national governments that manage trillions of dollars in reserves for a living. And they are all doing essentially the same thing at essentially the same time. When I see that kind of coordinated behavior coming from the most sophisticated, best informed financial institutions on the planet, I pay very close attention, because these are not retail traders getting excited on social media at 2 in the morning. These are professionals whose entire job is managing national reserves conservatively, and they are voting with real, enormous sums of money that they don't want to hold as many dollars as they used to. So ask yourself the honest question: if the most sophisticated, most well-informed institutions on earth are quietly stacking gold instead of dollars, what exactly do they know that the average person watching the nightly news doesn't? And here's a detail that most coverage of this topic completely skips over. This isn't just about buying more gold than before. It's about where that gold is being stored. For decades, a lot of countries kept a big chunk of their gold reserves sitting in vaults in places like London and New York, essentially trusting the West to hold on to it safely for them in recent years. A growing number of countries have been actively moving their gold home, physically repatriating it to vaults inside their own borders. Think about what that decision actually signals. You don't spend the money and take on the logistical headache of shipping tons of gold across the planet unless you've started to seriously question whether you want your reserves sitting somewhere a rival government could theoretically freeze or restrict access to in a crisis, That single behavior, gold coming home, tells you these institutions aren't just diversifying for the sake of diversifying. They're preparing for a version of the world where being too dependent on the dollar system and on the goodwill of whoever controls it is a real vulnerability instead of a safe default. Here's why this matters so much for what you personally do with your own money. When trust in a currency starts eroding, people don't just sit still and watch their savings quietly lose value. History shows they move into something that has held real value across every currency collapse ever recorded. And that thing, again and again, is gold. This isn't some fringe internet theory. Look at any period in history where a major currency lost credibility, whether it was Germany in the 1920s or various currency crises in different countries over the last few decades, and you find the exact same pattern every single time. Gold holds, gold protects purchasing power, gold becomes the asset everyone suddenly wants the moment they stop trusting the paper promises their government keeps making. Right now, we are watching the early setup for that same pattern to potentially play out on a genuinely global scale, not confined to one struggling country, but across the entire international system at once, precisely because the dollar has been the base layer underneath the whole thing for 50 straight years. And here's where it gets specific. When I look at gold mining companies, the businesses that actually pull the metal out of the ground and sell it, something interesting tends to happen that most casual investors completely miss. When the price of gold rises, the profit margins of well-run mining companies can rise even faster because their cost to dig up an ounce of gold stays relatively fixed while the price they're able to sell that ounce for keeps climbing. That built-in operating leverage is exactly why, historically, well-run gold mining stocks and the funds that track baskets of them have had entire stretches where they moved even harder than the price of gold itself during periods of dollar weakness and rising currency uncertainty. I want to slow down here and be completely honest with you, because I've watched too many people get burned chasing a trend after some guy online hyped it up without ever explaining the actual risks sitting underneath it. Gold mining companies are still businesses, full stop, and businesses can be run brilliantly or run into the ground. Some miners carry way too much debt on their balance sheet. Some operate in politically unstable countries where a government can rewrite the rules on them overnight and there's nothing they can do about it. Some simply have weak management that burns cash on projects that never pay off the way they promise shareholders. So if this direction genuinely interests you, the smart move is never picking one random ticker because some stranger on the internet told you to buy it. The smart move is either looking at a diversified basket, something like a fund that spreads your exposure across dozens of miners, and instead of betting your money on one company's management team, or doing real homework yourself on a specific company's balance sheet. Its actual cost to produce an ounce of gold and exactly where its mines physically sit on a map. I am not your financial advisor, and I am absolutely not going to sit here on camera and tell you to put your rent money into any single stock. What I am telling you is that the macro setup, a cracking petrodollar system layered on top of record central bank gold buying, is about as clear a signal as you're likely to get in this business in your lifetime. And ignoring a signal like that simply because it's unfamiliar or inconvenient is exactly how people end up missing the biggest moves of their financial life. There's another piece of this puzzle worth understanding because it explains why this feels different from the usual round of the dollar is doomed content that shows up online every couple of years and then quietly disappears when nothing happens. Predictions like that have been wrong for decades, and I want to acknowledge that honestly, instead of pretending this time is automatically different just because I said so. But what makes the current moment worth paying attention to isn't a prediction at all. It's a pattern already showing up in completed transactions, in public central bank disclosures, in actual gold flowing into actual vaults. I'm not asking you to believe a forecast about the future. I'm asking you to look at decisions that have already been made. by the people whose entire job is protecting a country's reserves conservatively, and ask what those decisions tell you. Professionals managing trillions of dollars don't move that kind of money based on a hunch or a headline. They move it based on years of internal analysis that regular people never get to see. By the time a trend like this becomes obvious enough for the evening news to cover it properly, the early, most profitable part of the move is usually already behind you. Let's talk plainly about what happens to regular people. People like you and me, if this shift keeps accelerating and nobody around us is prepared for it. If the dollar's dominant role in the world keeps shrinking, the cost of everything America imports can climb, because a weaker dollar simply buys less on the global market than it used to. That shows up at the gas pump, it shows up at the grocery store, it shows up in the price of anything with a supply chain that touches another country, which today is basically every single product on every shelf you walk past. The federal government's ability to keep borrowing cheaply also depends heavily on the rest of the world continuing to want dollars and U.S. government debt. If that appetite keeps shrinking year after year, borrowing gets more expensive for the government, and that added cost eventually gets passed straight down to everyday people, whether through higher taxes, through inflation, eating your paycheck, or honestly through some combination of both at once. This isn't a story that only touches Wall Street guys in expensive suits looking at terminals all day. This is a story about whether your paycheck buys as much next year as it does today, and whether the government can keep spending the way it has for decades without real consequences finally showing up at your front door. I've sat through enough economic cycles now to tell you with confidence that consequences always show up eventually. The only real question left is timing, and right now, a lot of genuinely smart money believes that timing is a lot closer than most ordinary people currently think. I also want to address the part of this that makes people uncomfortable, because I'd rather deal with it head-on than pretend it doesn't exist. Some people hear the dollar's dominance is fading and immediately assume that means America itself is finished. And that's not what I'm saying at all. So let's separate those two ideas clearly. A country can remain enormously powerful, innovative, and wealthy even while the specific mechanism that lets it borrow essentially unlimited amounts of money for free starts to fade. Plenty of powerful countries throughout history had periods where their currency's global dominance shrank without the country itself collapsing. What changes is the cost of doing business as usual. Things that used to be nearly free, like borrowing trillions of dollars with barely any consequence, start to cost real money again. That's not the end of the world. It's a return to something closer to how the rest of the world has always had to operate, where decisions have consequences and money isn't infinite. It just happens to be a very different environment than the one most people alive today have ever actually experienced in their investing lifetime, which is exactly why so few people are prepared for it. So here's what I actually want you to walk away with today in one clean thought. The petrodollar system that has defined the last 50 years of global finance is not collapsing overnight. And I never said it was. But it is cracking in real, measurable, verifiable ways through country after country quietly finding workarounds, through central banks stacking gold at a genuinely historic pace, and through the slow, steady erosion of the one thing that held the whole arrangement together in the first place, which is trust. You do not need a finance degree to see this pattern forming. You just need to pay attention to what the most sophisticated players in the world are actually doing with their own money instead of listening to whatever soundbite a politician is repeating on television. That night, gold and the companies that mine it sit directly in the path of this broader shift, and history has shown us again and again what tends to happen to that particular asset when a dominant world currency starts losing its grip on the rest of the planet. I am not telling you to bet the farm on anything you see in a video on the internet, including this one. I am telling you to understand the shift that is genuinely happening right now. Go do your own homework properly and position yourself so that when the rest of the world finally catches up to what's already sitting there in the data, you're not the very last person to find out. Here's your actual challenge, and I mean this sincerely. Don't just watch this video and immediately scroll on to the next one the way you always do out of habit. Go look up how much gold China, Poland, and Turkey have each purchased over the last 3 years. It's public information, and it's honestly staggering. Once you see the real numbers side by side, go look up how gold mining funds have historically performed during past periods of real dollar weakness, and compare that to how your own portfolio is actually positioned right this second. Do the work yourself, because that is the only way any of this ever truly sticks in your head and turns into a decision you're genuinely confident making with your own hard-earned money. If this video gave you something useful today, something you honestly didn't understand 20 minutes ago before you clicked play, then subscribe, because I am not slowing down from here. There is a lot more of the old financial system quietly cracking right now, and I intend to walk through every single piece of it with you in plain English. No unnecessary jargon, no gatekeeping. No pretending it's more complicated than it actually is. Drop a comment and tell me honestly what you think breaks next, because I read every single one of them, and some of the very best topics for future videos have come straight out of this comment section, and I'll see you in the next one.